Hey, what's going on, everybody? Thank you for joining us today at the Trading Rebellion show that we do every Monday and Thursday at 2 p.m. Eastern Time here at Trade the Chain. As you know, we have Monte and CJ, our regulars, senior market analysts for TradeTheChain.com, as well as Nick Mancini, our chief director of, I don't know, I'm throwing in chief director, I don't know what it is. He's our director of research and our chief community officer as well in our member community. We are joined today by a very special guest. If you are a trader in crypto, if you're a trader in the regular markets, if you are one of the unfortunates on crypto Twitter, you will know who he is. It is, well, horse, as you see on the screen, it's Ryan, but he is at the Flow Horse on Twitter. He has both 172,000 some odd followers. So very popular guy. I know I've been following him for a while, Nick and CJ Monte as well. Also, Ryan has a couple interesting things out there that I wanted to bring up because these are good resources for you guys out there. One is his YouTube. He hasn't done many, I see, but the ones that he's done, he's chosen quality over quantity so far. And it's at youtube.com/ at the Flow Horse. Okay, and they're very educational type programs if you run through them. Also, a big thing is to go to blockroots.com, and let me share my screen real quick to that. Here it is, blockroots.com. Now, these are free educational courses, correct, Ryan?
Yeah, that's entirely free.
All right, so you go here or you go to his YouTube. You're going to get a lot of information. So definitely check it out, folks. Really happy you could join us today, Ryan. I'm going to head over to Nick Mancini, cover with the macro markets and what we're looking at right now for the day.
Yeah, so the one chart that I just wanted to bring up that I think is the most impactful is DXY. And we did talk about this, throughout late last week and early this week, that any attempt to move to 101 would likely be bearish. And it has obviously, clipped equities a bit, and crypto is now at its recent lows again for July. So I marked out this line right here. This is FOMC day. It's not the exact time, but it's right around when FOMC will be released. So this is going to be a critical juncture, I think, for all trading going into next week and leading into the end of July. We are expecting a 25 basis point hike, and I do think that we should expect more volatility from the dollar index heading into FOMC and afterwards. And the higher this goes leading into FOMC and afterwards, the more bearish I become on markets as a whole. So a break of 101, this trend line right here would really be kind of a big bearish catalyst for me. So watching this very closely as we lead into FOMC next week. We also have earnings going on. So this is going to be a very topsy-turvy sentiment couple of weeks, and you're going to see a lot of people on the news wire battling between bullish and bearish opinions. And I think at the end of the day, this chart is going to give you one of the best indications of where markets will end up heading as we dip into end of July and early August. So that's really the macro overview. But I think if anyone is 100% certain on directionality over the next few weeks, I'd have to call them crazy. So that's what we're looking at to kind of set the tone.
Yeah, crazy or full of shit, either way. But looking at what we're seeing today, I think there's a lot of interesting stuff to talk about. And Ryan, I wanted to get your opinion on what is going on in some of the big names in the queues today. I mean, Tesla, with a positive earnings report, down 8%. That took a lot of people by surprise and has what many people have dubbed the Magnificent Seven, the big names in the queues kind of turning down. So what's your kind of outlook going forward as many of these assets have earnings coming up? Things like Microsoft, Apple, Nvidia, Google, Meta, etc. What are your thoughts as we head into earnings season here?
Well, I mean, you have to remember that there was the NASDAQ rebalancing over the last week, which is obviously quite significant considering the performance of some, obviously, the heavier pairs within that index. A lot of people talking about how with regard to the S&P and the NASDAQ, there's a breadth issue. You have I don't remember what it was what it is off the top of my head, but Apple like 7% of the index, or Apple, Microsoft, and Nvidia maybe making up over 25%. Don't quote me, but it's quite significant. This is actually something that a lot of the times people just use to speak their bias. Like there's been plenty of times where we've had a market that had really crappy breadth and, continued up for some time. It hasn't really been an indication of anything bearish. As far as Tesla, I don't focus too much on Tesla. I mean, a lot of my legacy focus has been on the leaders. I trade the ES, so I trade the ES and the NASDAQ when I'm trading legacy. I've played some coin buying the underlying and in options as well. So I'll focus more on Apple, Nvidia, Microsoft, the things that really swing the index. And you do have, I think, Apple's earnings coming up on August 3rd. And then you have Nvidia's earnings on either the 15th or the 18th. Don't quote me either on that. Coin earnings on the 3rd as well, August 3rd. So yeah, you have earnings coming up. I think what Nick was saying is pretty important. Where the dollar is, like, it's, again, I've used this phrase many times before, like big asset, big ship, big ships turn slowly. The dollar reapproached that 100 level. Was like a 12-year resistance, possibly turn support now. And you've seen that inverse correlation between the dollar and risk assets, in particular Bitcoin. It's mattered less recently as far as just intraday flows, but some of the larger legs, you could see that they correspond with inverse moves in the dollar. Yeah, I mean, as far as like the broader market and legacy, you have to imagine that there's I've used this example before, like there are a lot of funds and portfolio managers and larger asset managers that are, for the longest time, were sidelined, and on that break of like 42, 43 for the S&P, we're probably still sidelined and put in a position of feeling like, is this it? Like, do we have to chase the market up? And I still think you have that. I think that if the market moves up like another 10% from here, I mean, it was the S&P 5% off or 4% off, and the NASDAQ is 4%.
Single digits, I
basically
think.
the same. I mean, if you're making new all-time highs and you're not allocated, like you're out of a job next year, So there is that career risk. So the market can continue to see these passive flows continue to come in and lift. And honestly, I think, I mean, I'm long-term on the indices. I'm always bullish. Positive drift is something that's just natural part of markets and indices in general, because it's a survivorship index, right? I mean, it's just recycling garbage, and the leaders by market cap are doing most of the work. But I think that we're on, and again, this is not my forte. Like, I'm not a macro dude. I'm pretty much macro LARPing right now. But I think that we're on the cusp of like a major AI bull market. Like we're not even on the cusp of it yet, because really the only proxies for it have been like Nvidia and Microsoft and Apple releasing their Apple GPT or whatever the last 2 days, which has been completely retraced. I think maybe the markets are, I talked about this last week. It looked like the markets were showing a bit of exhaustion, but timing is very difficult. But we're really just only at a point where we know that AI is going to be huge. Like it's tangible. You're able to, whereas crypto, it's more like ethereal and Ethereum and ethereal, but it's more like, the promise of what it's going to bring. And it's like, you use it and it's like, it's a casino. Whereas like with AI, it's like, I know people will criticize ChatGPT that are way smarter than I am. I'm not a technocrat. I'm not like some like technological savant. I'm not a programmer, but I use it. I'm like, this thing is amazing. Like, this is awesome. It impresses me. So that's just the beginning. We don't even have like the IPO stage yet. We don't have any like small companies coming to market. Apple basically gave, I think they gave a year in advance to company, like they gave a year in advance for software companies to come up with the applications to be put onto their Apple Vision. So it's really gonna have like 5 things on it, pretty rudimentary. But all those companies, there's gonna be a ton of companies that come from just that. And Apple doesn't do anything arbitrarily. They don't just like, dip their toes into something. If they create a product, it's going to be massive. So I probably just said a lot, but I mean, I think that Legacy looks like maybe it needs a little bit of a breather, but I've been trading the S&P now for over a decade. It always looks like that. Like it always looks like it's going to turn, and then Zero Hedge puts out an article, and it's just constantly, it's like it grinds up, and then it has like a double-digit point down day, and then it just grinds up, and it's relentless. So earnings coming up. I mean, I'm staying positive. We're like I said, we're 5%, 4% off the all-time highs. I mean, FOMC, I feel like is kind of irrelevant at this point. The market leads the economy. There's a lot of recession talk still, but again, not my area, but just my opinions.
You
Well,
mentioned
CJ.
You didn't want to be doing any macro LARPing, or I think everybody's doing macro LARPing is really going on. But you had mentioned coin earlier, or like some option strategies around it. Could you talk a little bit about, would you feel comfortable sharing some of what you've been doing before, or like going into earnings?
Yeah. So with coin, so my last significant, one of my most significant trades this year actually was NVIDIA earnings. And that was picking up calls going into earnings. And it was kind of, that was a gamble because implied volatility is already really elevated going into earnings. But NVIDIA just absolutely crushed it. Like it was NVIDIA's last earnings. I think what was it up like 20% I think overnight. I don't remember, but it was
a trade of the
amazing
year.
trade. It was an amazing trade. It allowed me to really just like kind of F off for the summer, which I'm still kind of in that mentality. But as far as coin, prior to the ETF announcement, there was some interesting activity. And like you see, I mean, it worked out this time, but you see this happen and it's not really an indication of anything. But it was the August 18th, 80 strike calls that had just like over the course of a couple sessions went from really negligible amount of open interest to like 8,500 or something like that. So that stood out. I mean, that was by the looks of it a pretty significant directional bet. The ETF BlackRock announcement came out, I think, like a week after that. So whether that was an insider or someone just playing on, Q3, Q4 being much better, I think we are at that kind of point in the cycle either way. But yeah, I think that ended up like 12xing. So whoever picked up that position, which was quite significant, ended up making a ton of money. And then like over the last couple of weeks, you saw sort of the same behavior, but the opposite side. You saw a good amount of call selling, but coin has continued to rip. So coin had, I think 25% short float, which is not really a lot if you go back to like GME days, which was like 120%, 130%. But coin has outperformed crypto beta. So like native crypto has underperformed TradFi instruments, which kind of makes sense because there's no there's a stigma to like jumping into this river, this crypto river. It's not as comfortable for a lot of people, and there's a lot of TradFi instruments that are proxies around this whole trade, and they've really outperformed. Coin is just an outlier example.
So would you say your kind of mental framework going into earnings for coin is kind of the same or similar to that of what you took into NVIDIA?
I don't know. I mean, I feel like at this point it's already it's quite elevated. I've been playing some. I've actually been playing the other direction in coin as of the last couple of days. I actually got shaken out of some puts that were the same expiry, same tenor. But yeah, no, I don't think I would take the same gamble. The NVIDIA, I'm going to call it a gamble because it wasn't like it was it was a one directional play. It was just there was nothing about it that was hedged. It was just a directional bet. The NVIDIA play was kind of it was before we haven't had it yet, but like the beginning of the fever pitch of AI. And I just figured that, all right, I'm willing to punt some premium on this. If I lose, I lose it. It's not a big deal. But if we're where we're at in the cycle, what I think, then this should pay off. And 50-50 sometimes it pays off, and that time it really paid off. And I bought them considerably out of the money too. But no, coin, I don't think I would take the same approach, honestly. Although, I mean, not for nothing, there's been the ETF trade is like, I don't want to continue to talk too much. Maybe you guys have more questions when I go into other things, but I think the ETF trade is it's manifested itself. Probably 90-95%. We're done with it. it means much more long term. You know, so I don't know, whether or not that'll be reflected in Coin's earnings. I mean, I'm assuming they've done well just because there's definitely been a lot more interest. There's definitely been a lot more TradFi activity around crypto, getting involved in funds that trade crypto, the ETPs, CMEs. CME's trading at 12% annualized right now. So, yeah, I don't know. Maybe I'll change my mind when we get closer to that. But as of right now, I don't want to buy some elevated premium.
Speaking of, we're talking about kind of crypto equities here, and I want to make sure that we get, a full view of equities. So is there anything that is catching your eye, whether it's within the S&P 500, whether it's within NASDAQ, or it could even be, a crypto equity? Is there anything else that's catching your eye from a trading perspective, whether that's options or, futures?
I mean, not really. It feels compelling right now to like start looking for plays to the downside just because of how much we've moved off the lows. But I mean, if there's any time where you wanted to buy protection, now's the time to do it because the VIX is still crushed. And, that downside protection is still cheap, but it's just people are buying puts and then closing them out for nothing. The market continues to melt up. One thing you want to look for is just, and it's kind of there, but it's tough to take the temperature on these things, like being on social media, paying attention to regular media, whether it's CNBC or just like people you talk to. I don't know if we're at like that point yet where people are really, I mean, I know there's a good amount of froth in the market, but I don't know if we're at the point where it's like people are substituting buying stock, thinking it's the bottom for buying like the calls. So, it's, you're in trouble when people start just reaching for calls and start reaching for derivatives and into the options market rather than just buying the outright. And I don't know if we're there yet. I mean, the VIX isn't saying anything like that. I don't really see a whole lot of I don't see a whole lot of froth in the equity market. I think that there was a ton of fear. I think that a lot of people were sidelined. And I think we're seeing the ramifications of the market, like clearly leaving a lot of that behind when, people were calling for like 2,500 in the S&P, and you have to remember, like, this is something that, long only funds are just passively indexing in this. There are way different types of flows in legacy than there are in crypto. Hopefully that'll change within the ETF, but you just have people that are jumping into the market with a 5-10 year view that look at 20% drawdowns and 30% drawdowns as, clearly value buying opportunity. So the whole way down, you have different types of entities in legacy that are helping to suppress volatility from like a 1% move down to a 20% move down that are looking to buy their version of the dip. So it's kind of up only. I hate to say that because it is until it isn't, until there's some black swan, but I don't see it right now.
And I really like your take on hedging, because we actually literally just talked about hedging on Monday, and we briefly mentioned it on last week's show as well. And I think now is the time where you really want to start thinking about a hedge if you have been long since the lows or since the beginning of the year. But I think also on the other side of that is, when would I kill my hedge? When would it be the signal that we would head higher? And I think you have a point in what you said before, is that FOMC could be priced in. And if we do rise after another rate hike, I think that could be a big signal that hedgers could be misplaced. But I agree with you. I don't think it's a bad idea to buy insurance at this point in the stage as we're staring down the terminal rate. So that's a really good point you make there.
Yeah, it's cheap. I mean, look at the VIX. It's at multi-year lows at this point, but it's that way for a reason. It's like a lot of people look at a VIX that's elevated and they think that, you have to start selling volatility. And when it's, suppressed and crushed, you have to buy. But it's like, no, it can trend for a really long time that way. And it could trend a lot longer than you could hang on to your position. That theta will just eat you up.
It's a good point there. Do we have any more equities topics? I know we can't hold Ryan forever, and I do want to talk about Ripple and maybe Bitcoin if we have the time. But any more equities topics before we kind of mosey on to the casino market?
No, let's go to the casino markets, and don't forget to bring in, we have the whole announcement today with Fed Now, so throwing some wrenches into the mix.
Well, do we think Fed Now is a thing? I think that's kind of we're just kind of that's water off a duck's back, I think.
Okay, put the tinfoil hats with the CBDCs. Won't think that.
Well, is it me? just to have the conversation. Do we think that Fed now is something that's going to impact markets now, or is it just something we need to worry about in a couple of years if a CBDC comes?
I think it's more
Because
of a
I think that's it's the last.
I think it's more of a dystopian conversation than a trade conversation right now. To
Agree,
your point,
agree.
Yeah. It's like, oh, you bought too much milk this month. Sorry, we're going to turn off milk credits. Like, as you could go pretty far down the rabbit hole with CBDCs in terms of how dystopian you want to get. But it's like, I don't know. I feel like all the movies we watch when we're younger versions of them end up becoming real. And it looks like we're headed in that direction. I mean, we'll see.
It's a good point there.
Nick, let's take it to the casino, man.
All righty, casino markets engaged. We are now in fabulous Las Vegas. So I think we all know that XRP was, I think, greater than 50%, or not greater than 50%, greater than Bitcoin trading volume over the past week, which I think to me is also a bit of a bearish indicator. If anything is overtaking Bitcoin in volume, I think we have some sort of reset that may be staring down, but could be wrong there. But looking at price action, we tagged 94 cents. The big dollar level was not hit. And Ryan, I did see you talk about on Twitter today, you were interested in shorts at 84 cents. Is that, are you still thinking that we pull back to maybe 70 cents or lower? Or are we going to be maybe pushing up to $1 on Ripple?
So yeah, I guess maybe a week ago, I said that I'd be interested in shorting anything back above 80. So I'm actually short Ripple right now. I think my average price is probably around 81 something. And then I have scaled orders up to 95. Listen, the XRP news is great. It's better for other projects rather than for XRP. I know that it's the weirdest thing. I have a lot of friends from outside of the crypto market, from friends that are legacy market traders, portfolio managers, all the like, and they love Ripple. I think it's the first thing that when they came to crypto, one, it was, there's that unit bias because it's much cheaper than most other things. If you're on Coinbase, this is going back to 2017. Now there's a ton of garbage there, but made sense. It's it's the fastest crypto. It's going to be how banks send money between each other. Okay, I think Ripple's garbage, honestly. I think what happened for Ripple is better for a lot of other projects. It kind of takes, it gives a little bit more wind in their sails. It takes away a little bit of that fear, that overhang from regulators. Maybe allows them to be a little bit more liberal with how they go about coming to market, even though there's not much friction coming to the market in this market at all. But there was a ton of fear in this market. I think that ends up assuaging it. I think $1 is a Schelling point. I mean, I was in the Ripple long 4 minutes after the news release. I'm in a very small group, and two of the people in the group, they were just basically scraping databases to get the news first. I ended up getting it at the gym. I wasn't one of the first people in, but I rode that long. But I was happy to sell. I think maybe we roll $1 and we see maybe $1.03. I would be happy to get filled up there, but Ripple is, I think we're still in a PvP market right now. Unless we're in an absolute, period of retail just storming the gates and entering in, at the end of the day, Ripple's a $40 billion market cap coin. It takes a lot of effort to lift that. It's not as reflexive as, something that is a fraction of that size. So it's going to take a lot of lifting. It's thin, so it did most of the work off of this news. The news response was bullish. Probably a good amount of market makers that helped those prices get that high. Ripple likes to sell into some of the bigger moves, but a lot of pairs are below the Ripple news release. BTC is below where the news came out, so BTC didn't really give a shit. A lot of alts, same thing. So yeah, I'm staying long Ripple. I don't know where I'll close it. I often don't have hard targets. Flow's good, I hang on. Whenever I start getting the heebie-jeebies, I close out. I don't want to bite off too much because there are those just, cavemen that are from outside of this market that really believe in Ripple. They believe in it. My wife's a horseback rider. She's in this group of women that they get together and they're part of a club. And I hang out with the husbands, and this guy is a good friend of mine, and he'll not pay attention to anything but Ripple. So he just knows everything about Ripple, the process that's going on. And I'm like, dude, like, I remember like during the bull market, I'm like, just buy some Solana, just like buy a little bit of this, please, man. And meanwhile, you know, Ripple like was negative beta to most of the market until this news. Like it was listless. It wasn't moving.
The last time anybody made money off of Ripple was January 2018, and then it went to sleep for 4 years.
That was me. Yeah. Yeah, I closed out a Ripple long doing bicep curls at like $2.50 at my gym from my phone. I will never forget that.
It's the last time I thought about Ripple.
And Alex was doing different types of curls. He was lifting the wine glass.
Yeah, so I mean, listen, it's good news, big picture. But as far as Ripple goes, like, you know, it could go down to zero for all I care.
So last question on Ripple, and just because I know you're a flow trader, which is unlike anyone else on the show, and we obviously saw insane volume on Ripple. Is there anything related to the flow or the volume on Ripple that is unusual from your perspective, meaning, you know, is keeping you in longs or keeping you in shorts, or potentially thinking that, you know, that type of volume could continue?
Yeah, listen, I think you can't discount the herd sometimes. Like, my opinions are my opinions, but like I said, there's a lot of people that believe in Ripple, and this just really validated their long-term beliefs, and they will continue to buy the highs. And, you know, one person buying the high is one thing, but when you have thousands of people doing that with their, you know, lunch money and their, you know, hard-earned money, that it can persist. So I don't want to discount it breaking through $1. I mean, the last 2 days, there was a significant spot bid. Like, every pullback was picked up. It looked like there was a TWAP that was, you know, taking place in the spot market. And it's like, yeah, a TWAP in the futures market, all right, not as significant as a TWAP in the spot market, where, you know, futures market's going to be a lot more sensitive. There is that path dependency to using leverage. The spot market is like, all right, this is someone who has, you know, they want a longer term position. But, you know, at the end of the day, the spot market can sell as well. So I think in this pullback, one thing that I've seen that kind of validated my belief is that a lot of the open interest that has come in for like the second leg up into what was that first big day's wick, a lot of that open interest seems really sensitive to any downside move. So I like to see that, especially if we haven't made a new high, but open interest has really picked up. Because for me, if I see that open interest is sensitive and it hasn't completely retraced yet, and that positioning, is sensitive, then I'll hang on to my shorts, because I know that we're probably starting to trade below like people's break-even level. And then it's just a matter of thinking, like, how do you behave when your position goes underwater? You know, you're going to want to sell out. So I look at it as like there's more fuel for that sell pressure to manifest. And again, I usually, if I'm convinced but I'm a little worried, I'll hit the bid with half normal size. I'll just leave the remainder to scale, and if I get filled, I get filled. If we're back above $100, then I'll change my mind. But I think this is something to give it a little bit of breathing room. I think it'll probably put up a decent fight, but yeah, I think we end up coming back down.
I tend to agree with you there. So Monte, CJ, we probably don't have too much time to talk about Ripple, but anything else on that? You guys bullish? You guys bearish?
I got nothing to say about Ripple. I think you guys more than covered it. And, you know, I completely agree. But I have a question for Ryan. You know, one thing that you've talked a lot about is kind of, you know, managing your positions. And we talk a lot about risk management on our show, and, you know, cutting your losses when they go underwater. Obviously, you live a busy personal life as well. How do you, like, what's the max number of positions you're comfortable having on at one time and feel comfortable monitoring them? In fact, actually, I think if I remember correctly on Twitter, you said something the other day that some people on crypto Twitter found blasphemous, which probably means it's genius. But you said halfway through the bull market, or halfway through the last bull market, I was like, please effing stop. Obviously, I'm grateful for all that I have now, but my brain was through the gauntlet. You want to talk a little bit about that? Like, how do you manage all these positions, your personal life, and everything else?
Yeah, so there were a lot of people. So I'm in a couple small chats with some well-known people, and there are a lot of people saying the same thing. Like, halfway through, I mean, it was a gauntlet. Like, it's really hard to not feel like you have to be on top of everything in this market, because it's the one market where you, if you are somewhat of a generalist, like, you could make a ton of money. You know, like, if you're not you know, a shitcoin trader, excuse me, there are still times when you could take advantage of them popping off. Like, you don't have to be just a, you know, alt trader to be, you know, to take advantage of that beta during really good times. So it's like, all right, I'm focusing on my BTC trading, but I don't want to miss out on everything that's going on when the market is driven by momentum.
Right.
But, you know, enough of that, and you just get tired. I mean, I am 38 years old. Like, now I have a daughter. During the bull market, I didn't, but it's like, this is a couple bull markets now, and you're just constantly refreshing Twitter, you know, the chats, you got 100 missed messages. It's a lot, right? It paid off. Okay. But you only have so much bandwidth to expend at any given time. And, you know, you're borrowing from the relationships you're in, you're borrowing from, you know, your health, your well-being. So that's why I said, like, you got to stay on top of your physical fitness. Cause listen, this thing is the only thing, right? I don't like, so with regard to positions, like, listen, I'm not complaining, because I would love for those periods to continue, because, you know, you could make a ton of money and then you could just F off for however long you want and do whatever you want. As far as like holding multiple positions, I hate it personally. I don't like line items. I've said that many times, like 3-4 positions max. That's for me. Some people, like, you see, they'll share screenshots of like 10 positions open. I can't do that. At that point, it's like you're just indexing in just the broader market. I don't know enough about individual pairs. I don't want to LARP and say I'm like big on the fundamentals of any of these pairs. So I might as well just double down on things that are strong. So not like, you know, people will find a leader usually and then go look for the laggard. I think it's usually beneficial to just stick with the leader. Like, unless we're in that, you know, we're in that market cycle where it's like you're leapfrogging from one thing to the next, but we're not. I will hold a lot more spot, and I say line items, like a lot more positions in my portfolio when I feel like we're in a raging bull market. And that means that I'm doing it late, right? So like, I'm not a bottom buyer unless it's BTC or ETH. And even then, it's like the confidence to say that I'm a bottom buyer is like, I've gotten away with it a few times. I've bought within 10% of the bottom. I've done a good job of systematizing that. But alts, like, I don't want any part of it. I'd rather buy into strength, you know, every single time. And I'd rather miss 50% of the move, because at the end of the day, I also can't hold things. Like, I just can't. I don't understand how people hold 20Xs. You have to forget about it. It has to be a really insignificant amount of money. And at that point, I really don't care about it. I'd rather compound 3 to 5% trades, because mentally that's less exhausting than trying to, like, someone holds a, you know, 50X. That means they actually didn't really apply much risk management, because, you know, on the way up, that thing retraced like a bunch of times. So I don't have that. I'd rather deal with the emotions of compounding and knowing that, like, I'm better at base hits. The only time when I'll hold a lot is, like I said, if we are in a raging bull market. And that usually means the main criteria that, you know, survivorship, it's meant to this case that it has been the case, or meant up to this point, it has been the case that we're making a new all-time high. Because when you make a new all-time high, people kind of joke about the effectiveness of that trade. After a market spends a long period of time under, you know, a major contextual level, the biggest signal you could send to every person in the market is breaking a new is making a new all-time high. You're saying to everybody, portfolio managers, CTAs, investors, if they weren't long, they were wrong. You know, you're saying you better get into the market. So that brings in a ton of retail. That's when I'm willing to, like, give things more breathing room and hold more positions. But, you know, how many times are you going to be in that kind of conditioning, you know? So it's tough.
Well, I got to say, the last 5 minutes is probably the most important 5 minutes of this whole episode. You know, survivorism, learning risk management, something that we preach a lot to our guys and our members. And I know that Nick, CJ, and Monte prioritize that over alpha every day of the week. And it's super important. Otherwise, you get stupid bull run traders that think they're the greatest thing since sliced bread. I know we're about to wrap this up, but I want to ask you, with your style of trading, with flow trading, what would you say are 1 or 2 of the most important keys to that style of trading that you implement for success?
Having an understanding of market structure. So having an understanding of, like, what normal behavior is for the market, so that you're able to identify what stands out as anomalous, weird activity. And this market, it's pretty easy compared to other markets, because you have mostly just retail traders in this market, like getting long through the worst possible points, getting short through the worst possible points. So having an understanding of norms. So whether this is the normal amount of volume to expect during a trend through a breakout, the normal amount of open interest change to expect per relation, per change in price, focusing on microstructure, right? So having an understanding of how the market moves to begin with, having an understanding of how liquidity affects that, right? So whether we're sticky, whether we're thin, and then it's just a lot of, like anything else, it's like screen time. Like whether you're playing basketball and you're shooting a bunch of free throws, or you're a trader and you're just focusing on the tape constantly. This is a great market to do because it's a technically driven market. So I think most importantly, I would say having an understanding of norms, just again, so you could reflect on it. Like there's many times when there's just free trades in BTC and ETH because like it's not normal for price to move, a couple 100 basis points. And then you see that there's like 12,000 BTC added in open interest. It's like, okay, like that stands out like a sore thumb. The nail that stands out gets hammered down. And in a PvP market, you're going to have the market trade against positioning. And someone who said this really well is Michael Platt of Blue Crest Capital. He said you have to trade like a market maker. The market is going to trade against positions. The market is just positions, right? So identifying where positioning is getting trapped, where it is getting stuck, and then knowing when there are bigger flows that are taking place so that you're not like fading it at the worst possible points. Like a break of an all-time high, you're not going to look for the same setup because at that point, like everyone is going to be longing from their phone on Coinbase. Like, why are you fading that flow? That is way bigger than you and I. So it's like anything else. It's a lot. I mean, I don't think I could summarize it in a couple points, but a ton of observation of how the market moves, paying attention to tape. You can only help yourselves by doing these
that
things.
Market structure point is key. I think if everybody can learn what a basic market structure looks like and what and when it breaks either down or up, and forming higher highs, forming lower lows, and that whole subset of acronyms is very core to, I think, just a really basic, all basic trading strategy. So, love that you said that, Ryan. I think that's something that everybody, whether or not they become a flow trader or are interested in it, can really take home and run with.
All right, folks, listen, I want to give him his time back. He has a busy family, and I know that his wife is going to come back from the stables tired, meaning he's going to have kid duty. What I do want to put, which I just dropped in the chat now, is go to Ryan's YouTube channel, youtube.com/@theflowhorse, as well as I'm also dropping in his free education website as well. So go sub with him down at the YouTube. And if you guys are new to trading, intermediate to trading, go check out blackroots.com. Courses are free. He has a lot to offer. And of course, follow him at Twitter at the Flow Horse. And man, thank you so much for the time. I really appreciate it. I know you've been busy over the last 6 to 8 months with life, and you've been very kind in sharing it with everybody and all your followers. So thanks for letting us live through it with you. And, we'll see you next time, bud.
Awesome. Thank you very much for having me on, guys.